The Nasdaq still up 5% for the month. So how should we view the market action as we close the books on May and turn to June? Let's bring in Mike Bailey, Director of Research with FBB Capital Partners, and Mike Santolli, a pair of Mikes, CNBC senior markets commentator. Mike Bailey, let me begin with you. If I'm reading my notes correctly, you have a rather, shall I call it, benign view of what the market may do from here. You think that corporate earnings may pull stocks along and falling inflation may push them from behind.
Absolutely. No, I think that's a good summary in terms of what we're looking at. Listen, this is Power Lunch. Let's do a food analogy. We've just come through a very nice meal, if you will. Macros are pretty good. Inflation's coming down. So we're getting kind of this Goldilocks. Earnings, generally a pretty good earnings season. So pretty good meal. However, we just got this kind of terrible dessert right at the end. Some of these software companies, Salesforce and others blowing up. So that's really what we're looking at here for broader markets. Is this an indication of what's next? Some more pain in the tech space, or is this sort of a one-off? We're putting sort of everything together, looking at the last several weeks. In general, our view is that we're going to see markets continue to perform. If stocks are chasing earnings, overall earnings look pretty good if you take out some of the software companies. That's our general view, is that we are going to see a continuation of some of this move. We'll have to see, though. We're going to get Adobe earnings in a couple of weeks. That'll be another data point for investors.
There's the benign view, Mike Santolli. Give us the counter argument here, whether you agree with it or not. What would those who are more skeptical about the market say today?
Well, I think, first of all, Tyler, you'd observe that the market itself has been a bit erratic here. You've had a majority of stocks really underperform this month and also this year. There's been this defensive leadership, especially recently among the mega cap tech stocks, seeing some reversal of that yesterday and today. And it seems to be the catalyst in the form of treasury yields going higher. So they backed off for 2 days. The point is, I think the macro has to remain in a relatively contained path. In other words, disinflation has to be persuasive enough that it's still underway. You can't have the overall economy slow too much. Earnings, I agree, are definitely the big support right here. It's probably one of the reasons the market is insulated from big sudden downside. But I also feel as if the April pullback of 5% maybe was somewhat incomplete. You didn't really refresh people's need to kind of rebuild their exposures and get bullish again because they never got bearish.
I think that's interesting, Mike Bailey. Also, I was asking earlier about breadth, which evidently is starting to kind of turn lower, or however you describe it exactly. I mean, what do you want the market to show us at this point? It has been very strong, but it's starting to tell us that maybe its energy is flagging, Mike Bailey?
Yeah, there's a little bit of that. I think in some ways the execution risk is starting to get amped up a little bit. So you've got some high growth companies, the new economy, some of the software companies under some pressure. So that is raising some questions among investors broadly. Is the AI trade over? Is this just a one-off? But I think a couple of things. So there is going to be pressure, especially on these higher growth tech companies, to execute. Oh, by the way, stocks are up, valuations are up, so there's a less margin for error. So companies really do need to execute. Again, it's going to take a few weeks here for us to get some more companies, more data points to support that. At this point, again, I'd go back to overall pretty good earnings season. So that gives us some confidence that we're in pretty good shape. However, we do need to see some better execution, especially in some of the software companies.